good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the closing trades do not look very happy for the bulls, at least, because we're at the lowest point of the trading session as far as the Nifty is concerned. Well below the mark of 19,700 as far as the index goes. And it's a bank Nifty which is also putting a lot of pressure on the markets right now. That index is dragging down by as much as 400 points. So a lot of pressure actually coming in from the bank Nifty. And that's the key underperformer in the trading session today. What's really standing tall is, of course, the entire pharma sector. That one is doing quite all right. Whether it's a Cipla or a Dr. Reddy or a Syngene, which is all the result reaction, you are seeing that all of those stocks are firmly in the green today. So pharma definitely the pack which is doing quite well in the trading session. What else is buzzing? Let's take a look at that as well, because in terms of the other details, we'll get the other sectoral trends as well, because it's autos which is dragging quite a bit today. M&M, of course, has seen a massive slide, almost 10-15,000 crore eroded worth of market cap over the last couple of trading sessions. Today that stock is down 7%, so the auto index has been dragged lower by that. Having said that, as we were pointing out, it's pharma which is doing all right, and then a lot of result reactions today. So whether it's a Birla Soft or a Westlife, REC, Godfrey Phillips, all of these have managed to report good set of earnings in the last few minutes. So we're watching out for all of those, and then earnings coming in from IEX and Dr. Lal as well. IEX looks on the weaker side prima facie, but Dr. Lal holding up in the green.
Yeah, but the one taking the pounding and, rubbing off on the rest of the auto pack is definitely M&M. That stake buy into RBL definitely hasn't gone very well with the street. And, I think the street is pondering more about why such a capital conscious conglomerate like Mahindra and Mahindra would actually venture into buying a stake into a bank. To think of it, it's not a small one, right? It's almost in excess of 3.5%. So that is what the street is a little worried about. And the fact that they've categorically mentioned that they are open to upping this stake further. If they really had to buy a stake into RBL, then why not in the financial services arm, and why in M&M? So that is what has the street a little puzzling. We're all awaiting to hear from what the M&M management's rationale behind this is. Maybe on the sidelines of the earnings, we're going to get more clarity. But for now, both RBL and M&M are the ones which are really getting slammed in the session. M&M at session lows pretty much 5.5% lower, if not more than that. That said, like, Anisha was just highlighting, it's the pharma sector which is really taking the limelight today. Early trends emerging, the India business near double digit. That is what we've picked up both from DRL as well as Cipla's commentary. In fact, for Cipla, the numbers are even better than what they did in the previous quarter. And that's something that the street is liking. Positive US commentary, the fact that they're both saying that the sales are going to sustain and even rise further. That's what the street is really liking. In fact, before we move forward, considering it is pharmaceuticals which is really stealing the limelight today. When was the last time you saw an intraday move of 10% on Cipla? Let's hear out from both these managements.
I think the supply-demand side of the equation is readjusting or rebalancing, as a result of which the pricing pressure has moderated a bit. Going forward, I think, over the real impact of this moderation will probably be felt more in the next 6 to 9 months.
The price situation is primarily of how much competition comes to your portfolio at a given time, and what is the price that companies are offering. This specific quarter, we saw a moderation of that, unrelated to the drug shortages. So we have a very positive outlook. We believe that we'll continue to perform in the same manner. This year we have lenalidomide, we have a main asset acquisitions, we have a growth and market share gain on base business, and we do have 30 launches. So launches are still important lever for us, and all of these components will grow us in the US this year.
Okay, so since we're on the discussion of pharma, why not get a view from Sandeep Sabharwal as well as to what he's making of the earnings that we have seen. Sandeep, the last time we saw Cipla higher in double digits was back in 2020. So a massive move coming in. Do you think it's warranted?
Yeah, it's warranted simply because of the fact that the expectations were low and the company delivered very strong numbers. And the sector is relatively underowned at this stage. So among institutional investors, the holding of pharma stocks, most of the large funds don't hold any pharma stock in the top 10 holding, etc. So while IT, financials are reasonably owned. Many of the other sectors are not. So I think wherever we see positive surprises, such moves will happen.
You know, for those who've missed out on the rally in the pharma sector, I mean, be it a DRL, be it, Cipla or even Sun Pharma, which you closely track, can they still get in?
So I think when stocks move up in a straight line, I think jumping in at that time creates a situation where you could lose out in the short term. So that's always likely. But from a directional point of view, I think next couple of years should be better for pharma companies as the pricing outlook keeps on improving after years of price pressures. And these companies have also a situation where input price cost pressures are also moderating because as many of the inputs, APIs, chemicals, etc., are moderating. So many of these companies will also benefit because of that. So I think generic companies or those with a good specialty kind of portfolio, etc. So they should do well, I think, next 2 years.
Sandeep, what about M&M? Do you think this decline is giving the ones who have missed out a buying opportunity, or you are also puzzled about the capital allocation decision coming in with the investment in RBL Bank?
See, I think from for the size of M&M, the amount is involved is not as much as the concerns in the market reflect, but then it so I think then it creates doubts in the minds of investors. What are they going to do in the future? And there's no reason actually why they have done it, or they're anticipating some policy changes where they think that they might enter into banking as a group, and that's why they are taking this. So we don't know the internal thinking, but I think the reaction of the market has been disproportionate. So I think more or less what had to happen has happened. So if now results are decent, we could again see the stock do well.
Is that what the chart reading is? You think we could see a bounce from 1450 thereabouts in M&M?
Well, I would believe that I think it's better to wait out for the prices to settle into a trading range, because after that first, I think if I'm not wrong, the first 10-15 minutes the stock was down some 4.5%. There was a mild recovery, but then that recovery got sold into. So I think that's generally not considered to be a good sign, because if the stock tends to form a bottom in the first half an hour, first 1 hour, and then it sees a reasonable bounce back, we expect that the major part of the initial selling is behind us. But if the selling tends to accelerate for the stock throughout the trading session, then we expect that the trend would probably begin its course on the downside. So I'll wait out for a confirmation for M&M, whether the stock gets into any kind of a mild recovery. We'll have to wait out for those signals. As of now, it looks like that the intraday selling pressure as well as the selling pressure seems to be intensifying for the stock. I would expect, frankly, the stock to head towards 1400 or even below those levels pretty soon.
Yeah, and the selling pressure is intensifying for the whole market. Just pull up the candlestick chart of the Nifty if we can, because in the last few minutes there's a further downside that we are seeing, and in fact now we are threatening to go below 19,600. Let's pull up the Nifty charts if we can, because that will tell you that in the last few minutes the pressure has actually intensified at the Nifty level, and now even 600 is getting threatened. Of course, it's M&M which has been down 6%. Tech Mahindra has been on the back foot, but it's Reliance as well which is not participating today. So after that run up that we saw yesterday, it's cooling down materially, because there's a cut of 1.5% on Reliance as well. And then banking stocks, they are not helping at all the case today. There's only, I think, one banking stock which is holding up in the green, because whether it's an IDFC First Bank, Axis Bank, Kotak Bank, they're all trading with a bit of a red tinge, and all of that is putting a lot of pressure on the market right now. Naresh, your view on the market, do you think this move is purely related to the monthly options expiry? Because when I'm looking at the global data as well, there's nothing to get worried about. Europe has opened firmly in the green. Actually, it's up 0.5% to 1%. The pre-market rate on Nasdaq is actually suggesting an uptick of 1% on the Nasdaq. So we are falling in isolation because the Asian markets too are comfortably in the green. What explains that, Naresh?
So if we look at it, even the advance and declines is almost flat for the day. The mid cap and the small cap indices are flat. On a day when the Nifty is down 150 points, you would expect some bit of a reaction across the board also. So what is being seen is there is some bit of heavyweights taking a knock, and whatever stocks which are doing well are very small weights. So it looks like an expiry move wherein we are seeing some pressure given the last day of expiry, but the view remains the same. 19,500, 600 is a band. where you should be actually looking for a dip buying. We've come very close to it. So a 100-pointer stop loss and a buy here looks a good trade on the Nifty.
That on the index, oil and gas weighing heavy thanks to Reliance. Pharmaceuticals really saving the day, but that's not quite the case with the rest of the market. Look at ICICI Bank, completely flattened out, and this after a positive start on the stock earlier today. SBI as well, not doing a whole lot. Maruti, Bajaj Finance, Bajaj Finserv, both those stocks are down as we speak right now. And then, of course, there is the pressure coming in from Nestle, from a Britannia as well, from an ITC, Axis Bank, all of these which have just recently come out with their numbers. In fact, Sandeep, I wanted to understand, what is it that you made of Nestle's commentary? The fact that the volume growth has managed to fall short of what the street was, penciling in a range of 7 to 8%, 4% is what they've delivered. Well, the operational numbers may be in line.
Yes, I think low volume growth picture became clear when HUL results came out, and it was clearly reflected that the market has been slow on the consumer side due to the high inflation. And Nestle also has products where the inflation, input inflation has been very high and remains. So I think unlike many of the other categories on the consumer side where inflation is moderated, milk and milk-based products, it has not. And even cocoa prices are at all-time highs globally. So I think we could see some concerns out there. Valuations are not really cheap. Many of the companies are indicating a pickup in volume in June, July. They are saying is better than earlier months, but then we need to see once the results come out. I would think that as inflation moderates, consumer demand will revive, and that could happen going towards the end of 2023.
That's a take coming in on the FMCG counters, but for the markets, it's quite a bit of pressure that's developing at the moment. We are 200 points off the highest point of the trading session for Nifty. The Bank Nifty has stumbled more than 700 points from the highest point. So there has been a one-way slide. We opened up in the green, but since then, it's just been a linear downward move that we are witnessing. We'll track all of that when we come back from this very short break.
Back with closing trades right here on ET now. We've even slipped that 19,600 mark, perhaps. No, not quite. Not on the Nifty yet, but on the futures, yes. We're seeing a vicious cut of about almost 155 odd points. While M&M, of course, is that key pressure point today. There's HPCL as well, which is down 4.25%. M&M Finance is taking a whack of about 4%. Idea after that bizarre of a 10% move that the stock had yesterday. That stock has fallen 4% today. Canfin Homes, this has really seen relentless pressure, even though the management clarified on that 38.5 crore rupee fraud. But no, it's seen incessant selling on a consecutive basis, 3.6% lower for Canfin Homes as well as we speak. Tata Consumer, Nestle, ITC, and yes, banks as a chunk, starting off with Axis, which came out with its numbers yesterday. HDFC Bank, Kotak Bank, they're all down as we speak. And even, like I said, ICICI Bank, SBI as well, have all of them given up their gains. Kunal, just expiry day pressure, you think? By tomorrow, should it be okay?
Well, I started to believe actually that it's expiry related pressure, but then the data on the charts are actually showing something else. In fact, for the first time in the last 4 months on the line chart so far, so maybe if the next 45 minutes we see some recovery, the line charts could change a bit. But then I think so far at 19,650, 660 levels on the spot Nifty, we could be at the cusp of making a pattern of lower highs and lower lows. This is the first time on closing basis on the daily charts which we could be doing that. We've not done that pattern in the last 3 or 4 months of this recovery from the March lows when the Nifty was sub 17,000. So generally these are first signals that the markets are getting into a tiding phase or into a zone where there could be a lot of pressure in terms of selling at higher levels for the indices. And I think at this point of time, lightening your portfolios could actually be a better bet, provided the confirmation happens below 19,650 today.
Okay, lightening your position might not be a best strategy. In the meantime, pull up the intraday chart of Westlife Development. When the numbers first came in, we saw a bit of a spike on Westlife Development because the numbers were looking all right. And then we got the SSSG number, which was 7%, looked healthy to me, but seems like the street had higher hopes because the stock has completely sold out now. It's sitting with a gain of just around 1% thereabouts. In other stocks, it's the power sector in terms which keeps on rising. We have REC today, which is reacting to earnings and the good commentary come by, while IEX is on the back foot. Sandeep, not sure if you track these power names, but if you had to take a bet, which vertical would you look at? Transmission, generation, renewable, financiers?
See, power finances are similar to any financer, so there's nothing different in them. So essentially, there's no story there per se. They are PSU lenders. Where we have typically played and where we also have exposure is the transmission companies, both Kalpataru and KEC, which we continue to hold. I believe the growth as well as margin picture for them has improved. Although the stocks have also run up substantially, so I think both are at all-time highs. So to that extent, I think for newer investors, they need to time their entries, but we are staying put in this segment. Production side, I don't play so much because I believe that there has on the production side you always get into issues related to receivables, etc. And as you run to the election year, we could see more delays in payments, and there are a lot of other things which come up, which becomes difficult to predict profitability on the power producers side.
Okay, point taken. The other one which is doing quite well in the trading session, of course, is Colgate. That's high by around 7%. And then Godrej Phillips to a result reaction coming in. Nuresh, your view on the charts of Godrej Phillips and Colgate? Nuresh, you'll have to unmute yourself.
Godrej Phillips looks interesting. The stock has gone through a good enough consolidation after that last rally. The last time the stock broke out from 1200 levels, it went to 2150 and then consolidated, slowly drifted towards 1650. And now finally it has broken out. Now, ideally in this case, it should again cross about 2100, 2150. That would be the view. So going forward, dips closer to 1780 to 1800 would be a zone where you want to buy. So any dips here would be interesting to look at it with a short to medium term position as well.
We'll shortly get Vinny also to talk to us about Colgate, because of course one of the big factors for the company was that they have been losing market share, and that's why the market was losing faith in the company. But now there seems to be a bit of a bounce back, at least in terms of volumes that we have seen from Colgate, and whether that is something that could be taken at this price volume or not is something that we are watching out for. The rural economy is also expected to show green shoots, given that the monsoon has been doing all right. So after many quarters of decline to a slow growth coming in, finally, the volumes perked up by 7% for Colgate, and that was the big factor, and that's the reason we saw the revenue jumping up by 11% in this quarter. Of course, there's this premiumization which is working out as well. The company has been doing a lot of launches to tap into the different verticals. So Colgate is seeing a bit of a bounce back as well. Sandeep, do you track this one, Colgate?
Not very closely, but I think the reaction is because of the results. They were way above expectations, but I haven't tracked it closely for a long time.
Okay, so that's the take coming in as far as Colgate is concerned. But other than that, I think it's Pharma which is seeing the maximum amount of traction today. Cipla, Dr. Reddy's, Aurobindo Pharma, Gland Pharma, Polymed, Syngene, the list really goes on. But you know what, Sandeep, what I'm surprised about today is the reaction coming in on Tech Mahindra. Very, very bleak set of numbers, nothing to write home about. There was no silver lining whether you look at the deal wins or the revenue or the margins. But the stock is holding up okay. And then the other one, Birlasoft, which has reported a very strong set of numbers. That's high by 5%. How are you viewing, IT? Because a lot of people are now banking that this is the worst and perhaps this is the best time to buy.
So it might not be the worst yet, and I think the project ramp down still continue, and to that extent, companies which are facing issues will continue to do that. There are a set of mid-tier companies which have been doing things which are different and as such growing against the market, which include companies like KPIT, etc. So I think their traction might continue. IT is always a space which is found a huge amount of interest from retail, HNI, as well as funds. So all three categories of investors are continuously looking to buy stocks in the technology sector because of the fact They don't have debt on the balance sheet. They pay out good dividends, buybacks keep on happening, etc. So wherever performance comes, I think that might sustain. But overall, for the sector as a whole, the situation is not very good at this stage.
Labs numbers, if we can just quickly pull that up for you on your screens, because it seems like there is some very big one-off, but I don't really know. We'll have to dig deeper into the details. While the revenues, of course, are lower by 23%, it's the PAT figure which is quite off. Anisha, is there a one-off there?
No, none of the one-offs that I can see. I think it's the fact that the revenue has come off by 400 crores on a year-on-year basis, and the complete operational leverage which was there on account of that has gone away, and that's why the profitability is lower, because actually the taxation is also lower in terms of expenses. I don't see a jump up in a very big way in any case. Even the other income is pretty much at similar level. So I think it's a pure operational miss coming in from Laurus at this point of time. Weak top line, and that's following into the bottom line and the margins as well.
Yeah, 167 crore rupees on the EBITDA versus a comparable of 454. The PAT is down 90%. It's only come in at 25 crore rupees thereabout, whereas it was a comparable triple-digit figure, which we will just get up for you on your screens. It's a nosedive that Laurus Labs is seeing. But Kunal, just getting back to IT, you were earlier making a case in point that perhaps IT is coming into the buy zone. Maybe the worst is getting priced into the stock prices. What happens now after Infy's numbers and the incessant weakness that we've seen from mostly all companies after?
So yes, the weakness is there for the IT stocks, but then there is no incremental selling pressure. So, for example, the previous quarter when Infosys made a low, I think if I'm not wrong, the low was around 1200 or 1220 odd mark. This time around, after such a kind of a news flow event for Infosys, the stock has been unable to break below the 1300 level, which means that with every incremental news flow being negative, the stock is actually not making a fresh swing low, and that's the first important sign of resilience which we look out for when stock prices go through a patch of extreme news flow, but the prices, they stop reacting in a very similar kind of a behavior. So that, I believe, is the first sign that there is some resilience which is coming into the stock price. Now, ideally for traders, they can look out for two kind of strategies. One is that they start buying at current levels in the hope and expectation that maybe the stock may not come back to that 1200 levels, or else wait out for a point where the stock comes, say, closer to 1250 odd mark, which could be a midpoint of the support for Infosys. I think either of which ways, it indicates that the worst could probably be behind into the stock price. There may be a bit of a drag, there may be a bit of on and off correction to the stock price, but then that 1200 mark, till the time that's not broken for Infosys, I would believe that the stock can go into a strong recovery, say in the next 6 months to 1 year. So it's more positional time frame which is required, but 1250 is an important support for Infosys.
Okay, so that's a take coming in on Infosys, but back to Colgate, because that stock is holding up all right, and Vinny is joining us with the internals on that one. Vinny?
Absolutely, it is interesting to see why the stock is holding up as well, and will this actually continue is something that we're watching out for, because now the growth initiatives of some of them have actually started showing a positive side coming in. They had taken these initiatives long back in terms of launches, premiumization. They were focusing on that. Now early signs are visible in terms of these innovations they have taken, in terms of the launches they've done, the relaunches they've made. Early signs are visible on that front. Rural, that was also, they said that the rural demand is starting to see some green shoots as well as urban demand has remained positive as well. They're seeing a good response in terms of new innovation and renovations as well, which they are highlighting, as well as the RM price that has remained stable. So that could furthermore show a sign that in terms of gross margins, we could see a further improvement going forward also. Q1 was already good. Now going forward, maybe if this RM cost remains at this level, that would be a positive sign that could come in for Colgate as well. And analysts are saying that some of this volume shares that we're seeing this time, strong volume growth is what we saw from Colgate, that could maybe be mainly driven by good execution that they saw in the Q1 as well. Let's not forget, this time around the toothpaste volume came in at around 7%, which is at an 8-quarter high, and finally after 5 almost quarters of decline, we're seeing a positive volume growth coming in from Colgate. Also in terms of revenue growth, that double-digit revenue growth, after 8 quarters we've finally seen a double-digit revenue growth coming in from Colgate. So maybe a turnaround, is it what is something that one could watch out for? Because yes, there are some concerns in terms of the competitive intensity, which could lead to a market share loss for the company. That number is still not there, and obviously in the past in terms of the performance that has remained lackluster, because even after the launches and even after premiumization and that focus that they had, that was a bit of a lackluster. So that still remains a concern, and that is something that we have to watch out for in terms of these efforts they've made. Is it only a one-quarter thing, or will it continue to grow going forward as well, is something that we will watch out for in terms of whether it's going to be smiling or whether a cavity is going to be spoiling the Colgate's run-up, is something to watch out for.
Get your eyes off from Laurus Labs. Vinny, thanks for highlighting Colgate's performance. Laurus is taking a nosedive right now and actually now seeing a little bit of a recovery as well, taking its time to really settle down. Let me quickly take it across to Srishti and find out, Srishti, what went wrong in the numbers, because we're struggling to find if there is any one-off. Was the street really expecting such weak numbers? Absolutely no. The street was expecting better numbers from Laurus Lab, and especially from the likes of Cipla and Dr. Reddy's. The expectations from the pharma majors were definitely on the higher front, but Laurus Lab, what a disappointing set this time around. Look at the fall in the profit, which is now down 90% on a YY basis. And the margin specifically, the street was expecting, or rather penciling in, a margins close to 20-odd%, and the margins have come in at 14.1%. Other than that, if I look at the numbers, then the revenue has also seen a degrowth of 23%, as well as the EBITDA has seen a decline of 63% on a YY basis. If we look at the performance, then the company do mention that the CDMO synthesis revenue has declined comparison given the large PO executed last year. Otherwise, the baseline business tracking is healthy and the project pipeline continues to scale up. But for the API business, that has also seen a decline of 16%. The temporary impact in the other API, the oncology, is down, and they expect a rebound in Q2. So that's a bit of a positive commentary from the formulations business, where they say that the underlying demand is healthy though, but Q1 was reported weak, wherein they have seen a decline of 27%, mainly impacted by the lower offtake in their RAV business by global generics, because the street estimates were that the ARV business rather should now pick up some steam, and this performance should get better. But across the segments, we are seeing a weak set coming in from Laurus Labs, and that's what's reflecting in the stock price as well.
Surprisingly, Shrishti, the stock has completely reversed its losses and it's in the green. And I think the key critical statement is the fact that despite the weakness in Q1, they are saying they're on track to achieve the guidance that they had given out for FY24. They're on track to spending the capex plan that they had articulated. They are saying FY24 holds good potential with higher volumes of existing products driving Europe revenues and new approvals coming in from North America as well. So the commentary is something which the street probably is banking on, because the stock has recovered, even though this time the numbers are much lower than what street was expecting, as Shrishti also pointed out. It's the commentary which perhaps is keeping that stock afloat. But let's get some of the closing strategies from our chartists as well. Kunal, you go first. What's the closing trade?
So there'll be a sell on Ashok Leyland. My sense is that the stock has hit some sort of a plateau in terms of resistance closer to 180 to 85 territory. So that's the stock which I would look to sell.
What about you, Naresh?
Looking at Bank of Baroda, DCB Bank, which looks interesting. That's the one which is trying to give a short-term breakout. A range breakout here could surprise on the upside, and smaller banks have started taking trend, so this could be the next one on radar.
Laurus Labs finally settling in quiet, very swiftly recovered all of its losses, and that sharp, downtick that you saw in the stock. I don't know if you can bring up the tick-by-tick chart for Laurus Labs. That will give you a better picture of the kind of recovery, and preceding to that, the drop that the stock saw. I think the market is liking that they're going to manage to retain their FY24 revenue guidance. On that note, we'll take a very quick break, come right back. We'll track the last half an hour of expiry day.
Welcome back. Well, quite a bit of pressure. It's that 3 p.m. move which was coming into the markets, but a bit of a recovery, a smidge of that from the lowest point of the trading session, and quite surprising because the global markets are absolutely doing okay. If you look at the European market, the French CAC is actually up a good 1.25%. The future rates coming in from Nasdaq suggest a rally of 1%. The S&P futures as well as Dow there for you on the screen. So everything globally looks okay, but we are falling in isolation, at least as of today is concerned. But what's happening outside is that the rain god has also been too kind on Mumbai as well at this point of time. Heavy downpour is what we have seen since the start of the day itself. Red alert was issued, and I think that's having an impact. In the meantime, it's raining earnings as well for us. So after just decoding what happened to Laurus Labs, we have numbers coming in for ACC as well. The profit at the first look has come in at 464 levels. Let's do one thing, because the stock is reacting a bit positively. Let's wait back for more details on that one. Because as far as ACC is concerned, overall the earnings from Shree Cement wasn't that great. It wasn't bad either. It was in line with expectations, and Ultratech too was pretty much okay.
But 464, Anisha, as per our poll, is a big beat, because we were in any case anticipating a 44% uptake. 328 is the PAT figure that we were working with. So at 464 crore rupees, this is a big beat. And I think that explains the spike that you're seeing on ACC right now. But anyway, we are awaiting more numbers. So let's see, what their sales volume is, what kind of realizations they are hoping to clock in. Because actually for the cement realizations, we're expecting a dip of about 3% over there. So let's wait by and see. This is a monsoon quarter, delayed as it may be. But typically you would not really have as much volume growth as well, even though we're expecting a 6% mark. So let's wait by and see what those figures are like, because this is definitely a big beat, at least on the PAT, and that's, all the number that we have. We're awaiting more numbers there.
Yeah, in terms of the revenue, however, it's coming at 5,000 odd crores. So it's decent growth coming in on a year-on-year basis. Of course, a bit of a beat coming in versus our expectation, 5,200 odd crores. I'm just going through the press release to see if there is any more internal in terms of the realization of the volumes that they have given. Yes, so the volume growth is something that they're talking about. It's actually coming at 23% on a year-on-year basis, 9.4 million tons. Is the volume
big beat?
I'm just gonna double check that number if I have it right, because that's what they are saying in their release. It says volume increased by 23.2% year on year at 9.4% at 9.4 million ton. So if that's the case,
a big beat, because the sales volume, I mean, at least I'm just looking at our poll, and if you look at the industry average as well, at the max it could have been 8%, 6% is what we were penciling in for ACC. A double-digit volume growth in its 20s, that's a big beat, 23% if that's what they've managed to clock. And even the sales, 4632 is what our poll was penciling in, and the revenue as well is a big beat for ACC at 5,200. That's a beat on all counts coming in from ACC.
Yeah, even sequentially, because 9.4 compares with 8.5 million ton that the company reported in the last quarter, and last year this number was 7.6. So there's quite a bit of beat coming in there. The net revenue at 5,200 crores, margin has come in at 16.3 versus 12.3 in the sequential quarter, and 10.7 that was their last year. So I think it's a top line which has been very strong, driven by high volumes. That has meant that the operational leverage has kicked in. The margins is better than expectation, and that's the reason your profitability has come in above 400 crores versus the expectation of 200 crores. Quickly reading through what the management has to say as well. Mr. Ajay Kapoor, who is the CEO, is saying that they're delighted with the earnings as well, and they're saying that the growth was driven by robust demand for high quality cement products. And that, I guess, is the reason why we are seeing the improvement in margins as well. In terms of the outlook, they say the industry is in a positive cycle of demand as well as cost factors. This is coming at the most appropriate time when the company is under transformation phase, supported by synergies with the group, and we expect the positive trend of industry to continue in the coming quarter. So overall, for now, the first set of numbers that we have on ACC goes as a thumbs up. Of course, the street might be penciling in lower expectations, and that's why we are seeing a bit of a reaction of 1 to 1.5, a bit of a recovery coming in for ACC. But Devang, just wanted your sense regarding the entire cement pack and the initial sense on ACC.
Thanks for having me on the show. Yes, in fact, very happy to see good cement numbers. This is one sector which we have been bullish on, be it capital goods, be it infra, be it cement or building materials. Most of these companies are coming up with a decent set of numbers. And in fact, Ultratech also came up with good set of numbers. Looking at the numbers prima facie for SEC, looks like a huge beat in terms of profitability, in terms of revenues, in terms of volume growth, in terms of realization. I think, yes, need to go through the fine print, but this clearly shows that there is a robust demand scenario across the industry. There is going to be a lot of capex which is going to happen in the private sector, building demand, housing demand, refurbishment. I think a lot of such demands are right now causing sort of a Goldilocks type of a scenario for cement, which normally has a sort of a shallow cyclicality. But I think it seems like a very, very good sector to be in for the next at least couple of years.
Right. Okay. That's that on ACC. Of course, a big beat on all counts. And I think the stock as well is reflecting that pretty much. Just want to, see what else is happening in the market. And RVNL, we haven't really talked about that considering the OFS got announced. It's at a floor price of 119. 126 is the CMP for that one. And given the floor price for the OFS, we could see some more adjustment come by there. But Devang, just wanted your opinion on the RVNL OFS. I mean, it's an interesting bunch which you're now seeing OFS, if indeed there is a trend over here or not, because it's actually some of these railway and defense players where you've actually seen the maximum amount of wealth as well getting generated in the last 1 year or so.
Aisha, in fact, that's right. After a long time, you're seeing a broad-based rally, right? So from railways to defense to even stocks related to SEBs, the funding companies like REC, PFC, all this are coming up with not only good set of numbers, but in fact, the times are such that most of the opportunities for these companies are also sort of opening up for railways, be it Vande Bharat, metro, mono, infrastructure creation. I think it's a good time for all these allied sectors which had underperformed for the half of last decade. Most of these companies will do good. As I say, capex, credit growth, all this are leading towards some good numbers. So yes, no particular view on RVNL, but yes, most of these companies are going through a sort of a dream earnings period as well as a revenue visibility period.
That's a take coming in on RVNL. Let's take stock of what else is happening in the market. But apart from market, as we were talking about, it's also monsoons that we are tracking. If we can, let's go across to my colleague who's joining us. Shweta will talk to us about how the rains are in Mumbai right now, whether that red alert and that entire fear of heavy downpour is behind us. Shweta, what's the situation on the ground?
Well, absolutely. Let me quickly give you a gist of the, rain fury, what's happening in the capital, financial capital, I beg your pardon. But to start off with, I'm here at South Mumbai. This is near BMC, and talking about the waterlogging areas. Now, there are several key parts of Mumbai which are completely submerged in water. To begin with, it's the marine lines, from where we got an exclusive report for our viewers. It's been seen that low-lying areas, especially Dadar, Hinmata, King Circle, Sion, are the places where it gets usually inundated, but this is the time the time where 3 days more to come, where extremely heavy rainfall is expected for Mumbai and adjoining areas. Places which are considered to be posh like Churchgate, marine lines, these places have also been completely submerged in water. Now talking about the IMD predictions for next 3 days, IMD has predicted that orange to red alert, the conversion will take place as they record their rainfall. Already we have seen on 26th of July 2023 was the wettest July. The record was broken on the year 2020, where we are speaking about the commuters, the traffic congestion, the kind of woes they have been facing through. We have seen that how Shrishti was reporting over the pothole menace. I was reporting on the waterlogging situation, how commuters are facing huge difficulties, and Andheri subways again one of the place where Ankit was also reporting from. So completely to give you a gist of what overall Mumbai has been going through, it's been seen that the city has come to a standstill.
Yep, just hoping that it's not completely rained out, at least on our way back home. 1% lower for the equity markets, the drag, and there as well continues, 19,600 thereabouts for the Nifty futures. Important to see what the US equity market futures as well are up to, because the big move is actually in the NASDAQ this afternoon. 1.25% is the suggestive future rate that you're currently seeing. Let's see whether that rubs off on our technology names or not. Traditionally or typically, sometimes it does by fluke. Let's only hope that's the case tomorrow morning too, if and when the NASDAQ, when it opens for trade, does have that same rub off from the futures. But for our markets, it's pretty much the same story. We're pretty much closing around the session lows. No meaningful recovery in an M&M. In fact, it's still down about 6%. TechM still down. Tata Consumer, Nestle, Britannia, ITC. Reliance as well continues to languish. Just pegged around the 2,500 mark, or a little below that actually. HDFC Bank, Axis, Kotak, IndusInd Bank, they're all down and out in trade. Devang, considering yesterday we heard from Axis Bank and it wasn't much of an impressive performance, the NIM's lowest in about 3 quarters at around 4% or so. The operating profit as well saw a decline sequentially for a second straight quarter. Wanted to understand what's your pecking order now between, when it comes to these large private banking names?
I think most of these banks have delivered a decent set of numbers. Of course, the NIMs had sort of peaked out for a lot of such banks, and I think the street was factoring in that sort of estimates earlier as well. Yes, in terms of pecking order, of course, we like the large behemoth now, HDFC Bank. I think after consolidation with HDFC or rather merger with HDFC, of course, the economies of scale come to the picture, and then no one can sort of ignore the strength and the large size and the scale it brings to the table. So I think, yes, one, HDFC Bank, and second, of course, ICICI Bank, excellent set of numbers, again, expansion in ROEs, good profitability. And over the last couple of years, it's shown that how the ROEs and ROAs can probably change as the management changes. And I think exactly it's the narrative which has played out, which a lot of people were sort of factoring in. So I think HDFC Bank, ICICI Bank, and of course, then there are a host of certain PSU banks also which are showing good turnaround. But probably private banks is where I think still there is a lot of conviction left on the table as India grows and the economic growth rubs off on the banking sector and the credit growth as well.
So that's a take coming in as far as some of the private banking names are concerned. But Devang, what's your view regarding the kind of reactions that we are seeing on M&M as well as Can Fin Homes? So Can Fin Homes, of course, the fraud is to the tune of 38 crore rupees, but the stock has been seen dropping over the last 3 trading sessions, a lot lost in market cap versus the fraud amount. And similarly for M&M, it's just a 400-500 crore investment that they have made in RBL, but the market capital has eroded by almost 15,000 crore over the last couple of days.
Obviously, with the fast and furious rally that market has sort of encountered in the last couple of months, and there is very little sort of I can say margin of error for such companies. And in fact, as we know, M&M has sort of a dream business or dream capital allocation that it has done over the last couple of years, and all the businesses are firing on all the cylinders, including the XUV and then the SUV range of cars which it sort of manufactures. I think it's sort of got an extremely investor's delight to be in the portfolio. The amount, exactly what you said, is an extremely small amount. But yes, market has its own set of questions in terms of capital allocation policy and non-allied business. I think the management coming out and talking openly about it would soothe the nerves for a lot of investors. As I say, the business is superb. Yes, probably it's done a little more exaggeration in terms of price behavior.
Also, given the kind of reportage that we've had from both DRL as well as Cipla, higher than the previous quarter's guidance as well, visibility is extremely strong as per the management commentary as well, Devang. What are you making of this fresh revival within the pharma pack?
In fact, pharma has come out of a huge sort of a hibernation. The last couple of years were difficult. I think the COVID year was the year when pharma did extremely well, right from the US generic companies to even companies in the path lab segments. Most of these companies did well, or be it CRAMS. I think it's an extremely positive surprise to see Cipla sort of not only beating in terms of profitability, in terms of expansion of margins, and also guiding margin strength as well. Even Dr. Reddy is registering 72% sort of growth in the US market, and also positive visibility about India business for the next year, and very positive commentary. August very well. Pharma has been one sector which sort of was a dark horse, and we like the sector quite well. And I think from here on also, it's probably going on from strength to strength as it has come out of a long way of underperformance. Even companies like Syngene, which has come up with good set of numbers. So there is a good mix of companies which have come up with a good set of numbers. And I think also, most importantly, though the numbers are sort of, again, we can say is a rare view, but the windshield, the guidance is quite strong for most of these companies.
Right, okay. Time to get in some BTST trades as well going on that note. Naresh, what's on your list?
So first is a buy on DCB Bank. The stock is giving a short-term range breakout. Stop loss at 127, target price of 135. Second is a buy on BEL, which is trying to get close to a flag breakout above 129 levels. Preempting it, stop loss at 127, target of 132.
What about you, Kunal? What's a BDSC trade?
Well, I'll go with two sell calls, conditional sells. The first one is a sell on Berger Paints. the stock showing slight signs of weakness. So sell below 670, targets of 660 for stop loss of 682. And the second base sell on MGL, Mahanagar Gas, the stock showing signs of weakness after yesterday's candlestick price action. So would suggest a sell 1060 as a target and stop loss at 1100.
Okay, lots to digest today, and I guess tomorrow as well will be a full day, start of a brand new series. Anisha, what else is going to be on our radar?
Well, overnight, I think we'll get the decision from ECB as well. So after US Fed, that's going to be in spotlight in the US initial jobless claims data as well as GDP. So that's important to track. For now, the US markets is going full gear into that particular event. Let's see whether it holds up or not. But earnings, thankfully, there are no nifty earnings, but a lot of large ones that we need to track, right from an M&M Financial, Exide, United Breweries, Motherson Sumi Wiring, SBI Card, Indian Oil Corporation, Piramal Enterprises. So a lot really on our plates tomorrow. But the corporate action is that you need to track is Piramal Enterprises. Remember, on that buyback news, the stock had already seen a spike of 8 to 9% yesterday. The final announcement will come tomorrow, so keep that on your radar. RVNL, the OFS for the retail investors open today. Today, of course, it's open for non-retail. And then, of course, IPO action, wherein tomorrow will be the date when Yatharth Hospital's last day of subscription is there. But talking about IPO action, today we saw a fresh listing on the Bosch's. NetWeb Technologies had seen subscription of 90 times, has seen a stellar listing come in after that as well with a gain of 80 to 90% and continues to hold on to that. Devang, have you tracked this one? And if somebody has got the allotment, should they book profits? And if somebody hasn't, should they look at buying afresh?
Talking about?
NetWeb Technologies, the stock that listed today, if you track it.
Sorry.
Okay, no worries. Let's do one thing. Let's listen into the management as to what they have to say about the outlook, because they sounded fairly confident, even though the order book right now is 90 crores, but the growth prospects is quite strong. Listen in.
Yeah, actually order book is basically one aspect of it, but basically order book is definitely good, and currently the order book is also looking very bright. And plus the most important thing in our situation is the pipeline. The pipeline is very robust actually. That shows us that basically we will show a good amount of growth. Almost all we will maintain our growth, what we are trying to do. And so I think that gives me the confidence, that my pipeline gives me the confidence that basically I will be able to grow very well.
Okay, let's just see if there is any other trend which is emerging right now in trade. And we've got M&M which is slid actually more than 6% on the futures. Idea down about 4%. TechM hasn't seen any recovery, and the Nifty as well is going home pretty much at the lowest point in the day. 19,659 is where we're shutting shop, and that's a good crack of about almost 115 points on the futures, 77 points lower, although we've scaled back to 19,700 on the spot. Kunal, you were talking about as to how today's move is a definitive one, and you are seeing now lower lows and lower highs being maintained. What levels are you now looking out for next?
So that was the threshold of the benchmark. We went through below that zone. I think 19,600 was the low the index has made. But then I think on closing basis in the last half an hour, we've seen a good 100-point recovery for the index. So hopefully that support of 19,650 remains. I think that's the litmus zone for the index. So if we don't break below that 19,650 mark, we can probably expect that the pattern of lower highs and lower lows may not be completed. But if we manage to do it, say in the next in a couple of days, then I would believe that we could probably be at the cusp of a bit of a trend reversal for the index.
But what do you make of the rollover data, etc.? Because it's been a very strong month in terms of the series. We have seen a gain of almost 3.7%. And if I have it right, the rollovers are also quite healthy at 70% thereabouts.
So I think the last I had looked at the rollovers, in the mid session today was around 68% for the index, from 65% yesterday, and slight increase in bank. In fact, good increase in the bank Nifty in terms of rollovers, which we seen today. I have not seen the stock specific rollovers. So that generally indicates that maybe the market mixture is going with a much more healthier texture. The standout point for the series this time around is 140 points premium for the August series. That's one of the, I think if I'm not wrong, it's one of the highest premiums we've seen in the last 6 or 7 months of this calendar year so far.
And that means that would indicate the bullishness and the excitement that the market still has on the upside, right? Yeah. Interesting. But for the trade today, we're just closing down. So thank you, Devang, Kunal, as well as Naresh for joining us. But it's a Tepid close, much better than what we were at one point of time. We have at least managed to hold on to 19,700 at the closing level. The Sensex is down about 0.4%. Advanced decline has improved, but Aisha, it was Pharma that was clearly the star today.
So Cipla is going home with a 10% gain. You've got Sun Pharma as well, which closes in with a 2% move. Divi's Labs, DRL, Apollo Hospitals, Ancillaries, they're all holding out very, very smartly. Even Syngene, which bucked up a good 6.25% in trade. The other movers, of course, Colgate reacting to its earnings in the commentary, almost a 7% dash. You've got Birla Soft reacting to its numbers, a 6% move there. REC, which held out by nearly about 9% in trade. So see, these are some of the blowout winners from within the liquid universe. Have to talk about the pressure points as well. Besides M&M, there's also been Intellect, which lost about 4%, HPCL, TechM down about 3.5%, Tata Consumer down again almost 3.5% or so. Nestle, Britannia, Adani Enterprises, Axis Bank and Reliance, they've all been ranked underperformers. But on that note, we're going to wind it up right here on this edition of Closing.